Oh, here's Wes is just getting on now. He's had a little trouble with his connection, I guess. But yeah, so welcome everybody. It's Mary Nack and Wes Walker is trying to join us. He's having some technical difficulties. We're both with Compass. Hey, Wes, you made it.
I made it.
And we're here with our monthly market update with Terrence Terrell of Molitor Financial. I don't know. I was at an event yesterday and talking to a colleague who she feels she's out in Crystal Lake actually, and feels that the market has slowed considerably. I had an open house on Saturday. I had 5 groups of people through, which was respectable. I mean, we're not brand new on the market, but I can't say that I had the feeling that anybody was a real motivated buyer. They just seem to be getting started with their search, and seems like a lot of people are just starting to think about buyers getting into the market. What are you seeing, Wes?
I guess similar. Yeah, there's some activity, but not nobody's jumping at anything. Yeah, like a not the same sense of urgency there was a few months ago.
Yeah, definitely. But yeah. Terrence, you're doing well, huh?
Things haven't slowed down for us at all, so I couldn't tell you what. I mean, I know that from the conversations that I've had, it's definitely like Wes was saying. There's no huge sense of urgency like it was a few months ago, but I mean, people are still trying to do what they need to do and get in homes before the winter.
Are you are you still bogged down with refinances, or is that kind of slowed down a lot? Or?
No, that hasn't slowed down. People are jumping on them now as rates are starting to seem like they're starting to tick back up a little bit. I think people are trying to actually get it done. There were people that were holding out for lower rates, and I'm telling them, no, guys, they're going back up. So jump on it now, and that's what seems to be happening.
I get this daily, and I wanted to ask you about this. I meant to kind of prepare you. So hopefully you have an answer for us. I'm sure you do. I get this daily market, like a mortgage rate thing. It's and I know that it doesn't really mean a lot because it depends on the person and their credit and down payment and all those sorts of things. But in a general kind of a way, at least it gives an indication over a broad spectrum. And it seems like the last week or two that jumbo rates have been lower than conventional, and that's kind of upside down, isn't it?
Not necessarily. What's happened over the last couple of weeks are the loan limits for 2022 have come out. So people are able to do higher loan limits in conventional financing. So it's not that the rates are going down, it's just that the loan limits are going up.
But I meant that the jumbo loan rate is actually lower than the conventional loan rate, and that's
the jumbo rate itself. No, they haven't flip-flopped quite yet.
Okay. Well, maybe this thing that I've got then is not accurate because it seemed to indicate that conventional are about 3 1/4 and that jumbo loans are down to around 3 1/8. I mean, that's not a huge, but usually you think of jumbo rates being a half a point
higher, right?
Right? Yeah.
Right. I mean, they're not astronomically high, but they're still about 1/8 to 1/4 higher.
Yeah. Okay. All right. Well, but that's still a very good rate. I mean, if we're talking 3 1/2 on the jumbo rate, that's an excellent. It's still right. Yeah.
Yeah, definitely.
Good. Let me get out my charts and graphs. I'm kind of a charts and graph geek, and I've got them all pulled up here, ready to go. So let me show.
Mary, what was it? I'm going to test your memory here. What was it last week when we were talking on here and we were saying, oh, that'll be a good question for Terrence.
That was the question. That was my question.
Oh, it was? I thought there was something else. Okay.
Yeah. I seem to not have I don't seem to have the right thing up. Oh, here we go. Okay. I don't want to share Facebook. I want to share that. Well, we'll see what we get here. Okay. Are we Oop, wait a minute. Hello. I'm on the wrong. I tell you, the technical difficulties. What are you guys seeing?
Residential sold price.
Okay, all right. Huh. Oh, I guess it minimized you. That's what happened. Okay. All right. So actually I found this kind of interesting. This is kind of starting from the back and working forward, but I'm finding it interesting. I mean, the rates, the prices are still a little above the 2021 prices are still a little bit above the 2020 prices. But look at this line chart up here. I mean, they've converged here, which has been, I mean, you can see all year long, it's been the 2021 prices have been a little higher. And this is a pretty small spread here. Prices haven't really gone up too much. This stuff, I mean, we're finding that this is a showing, appointments being made to show property. We're right in target with the 2019 trend. The dark blue line, of course, is 2020. But we're back as business as usual, I would say, with our showings. And open houses, I mean, I think it's to be expected. So there's not a lot of rented new listings coming on the market. Interestingly, we have less properties coming on the market now than we did last year at this time. Which,
well, it makes a little bit of sense because last year at this time we went the first, many months without being able to show and put things on the market.
Yeah,
so,
and this only goes back to May, so it would be interesting if it went back to March and April, how this green, well, you can see already it's starting to tick up, and we had a pretty robust spring, summer market, not spring, but summer market. Properties under contract, we're kind of right in line with 2020. And closed listings, we're below 2020 in terms of closed listings. But again, I guess it makes sense because of the pent up demand. So, but I wanted to show the, how do I get to where I want to be here? Get this out of the way here, the info sparks. And this shows our market data. And what I did is, I got to get this thing out of the way here. Okay, so I can see. All right. So this is Chicagoland, the whole Chicagoland area, single family, detached single family. I didn't go into the new construction, just traditional, your traditional sellers selling it, not a bank or a short sale or a distressed sale. And these are properties that have gone under contract, and I think you'll see across the board, and this goes back actually all the way to 2008. But one of the things when I was studying this that I thought was really interesting is that here we are just before the market crash, January of 2008, and we've talked about this last month too, I think. And here we pretty much bumped along all this time until September or August is when we finally recovered, I would say, from the Great Recession. And then, of course, after we all
pricing, you're talking about pricing.
The pricing, strictly, I'm talking about pricing. And of course, then it shot up. And look at, I mean, this has been pretty amazing climb. But you can see July 2021, it's starting to slow down. We were at 320, 323, 325. It's not this leap from 300 up to, I mean, to 310. I mean, these $10,000 increments, we're just going up a couple $1,000 here. So I find that really, I do find that it kind of supports what we've been saying about the market is starting to slow a little bit. It's we're still very much in a seller's market, month supply of inventory. Again, the rule of thumb is if you have 6 months or less, you're in a seller's market, and we just don't have enough inventory. So it's still an interesting time to be a seller, but things are definitely softening, no question about it. So what else do we want to look at here? Any of these other things we want to look at? Number of homes for sale. Well, this tells it right here. not enough inventory. And of course, here we are in January of 20. This is COVID. January of 21, it's kicked up a little bit when sellers got the word about, oh, we've got a hot spring market, but not a lot of new listings. So that was kind of just what I wanted to share. I think it pretty much supports what we're seeing, that things are leveling off. We're moving into the season of the year when it's the time to be a buyer, and the interest rates are still good, and prices have softened, and I don't know, what else can we say?
So the bottom line is, it's time to buy.
Yeah, we're definitely moving into what I call investor season for sure.
Wow.
So, and the interest rates are still good, but they're starting to go up, right, Terrence?
Yes, they are.
So I was just, I don't really have an answer as to what's causing the market to be as soft as it is, actually. I mean, with the interest rates being what they are, I don't know if there's a general.
Well, the economy being strong, I don't know if you saw the New York Times this morning, was the lead article was basically that our economy is too strong.
Oh, what
Yeah,
does that mean? They're worried about inflation or what?
I think, yeah, several things, but yeah, I think they're looking to slow it a little. So that's probably why one of the reasons interest rates are going up. But yeah, it's and on top of it, it's creating issues with, we already have the backlog of supply chain and everything, and all the issues going on with transportation and the ports and everything else, and the robust economy is kind of making that worse. So
well, I understand that we need to start stocking up on toilet paper again. I heard over the weekend somebody told me the time to stock up on toilet paper, that we might start experiencing shortages. So,
I guess we're running out of trees.
Yeah, I don't know. I can't believe that all those people got through their garages full of toilet paper already, but
never have too much TP.
Exactly. All right. Well, I think that pretty much covers our market update. If you have any specific questions, feel free to please reach out to us or put a comment in the chat. We'll obviously get back to you as soon as we can. And thanks for listening, and we'll see you. Wes and I will be back next week with our usual baloney, right, Wes?
You're off the hook, Terrence.
You're off the hook, Terrence. All right. Have a good week, everybody. We'll look forward to seeing you next week.
Bye.
Bye.
Bye-bye.